friends. This is Pro VG. This video is very important for two reasons. The reason number one is the explosive situation in the world politics today, where many of the countries are involved in war. The second one is consequent upon this. There is what you call slow growth or change in the global money markets, particularly in the currency. Okay, in the light of that, what kind of steps you need to take? The world's economy is expected to change more than it has since the Bretton Woods Agreement in 1944 by 2026. The IMF says that global debt will reach 100% of GDP and BRICS-led de-dollarization is on the rise. This means that the global currency devaluation shift is no longer a conspiracy. It's a mathematical fact. The stakes are different for Indian investors. India's GDP growth is still a bright spot, but both domestic inflation and global currency realignment are making it harder for you to buy things. Today, we look at the numbers and the exact plan to protect your money. What if I told you that your 10 lakh rupees today, saving today, could only buy you 6 to 7 lakhs by 2026? Look at erosion. The Indian rupee has lost value against the US dollar over the years with an average drop of 3 to 5% per year. Now today it's more than 92 rupees per dollar. But 2026 is a point of convergence. The US is in a debt spiral where interest payments are higher than their defense budget for the first time ever. Look at the statistics that US national debt is 34 trillion plus dollars. India's foreign exchange reserves are about $640 billion. They are strong but could be hurt by oil price shocks. The real value of fiat currency is going down as central banks around the world move away from dollar denominated assets and towards CBDCs, central bank digital currencies. There is a change in the world. A lot of economists are talking about how the global monetary system is slowly changing. The number one is the digital currency revolution. Over 130 countries are looking into or testing central bank digital currencies. The pilot for India's digital rupee is going to include banks and regular people. Hundreds of millions of people already use China's digital yuan. A lot of countries are looking into digital payments to make their finances easier to manage and more efficient. Digital currencies might change the way money moves around the world. The cycle of global debt. Right now, the world has more debt than ever before. The world's debt is more than $315 trillion. The global debt to GDP ratio is over 330%. Even in India, borrowing by households has gone up a lot. Businesses are still borrowing a lot of money. Governments are still running budget deficits. In the past, high debt has caused inflation or changes in the value of money. Third factor is geopolitical realignment. There are more poles in the world economy. Things that have happened include expansion of BRICS economic cooperation, more trade deals in local currencies, some oil and commodity trades are moving away from the dollar system. This does not mean that the dollar will go away, but it does mean that currencies will compete more in the future. What this means for people in India? What do global currency trends mean for the average Indian family? Because the value of a currency has a direct impact on investment and everyday life. Like you get inflation from abroad. India buys a lot of important things from other countries, like crude oil, electronics, tools, parts for semiconductors. If the rupee goes down, the price of gas goes up. Gadgets that come from other countries cost more. Education abroad costs more. 2. Effect on real life wealth. Let's take a look at two cases. Example 1. A saver with a fixed deposit. Suppose someone invested 50 lakh rupees in fixed deposits in 2014. The real buying power today is much lower than expected because of inflation and the value of the currency going down. This is why a lot of people who save money say, I saved money, but I don't feel richer. Second example, investor in gold. Price of gold in India about 28,000 rupees for every 10 grams in 2014. Now in 2026, it's more than 1,30,000. Gold often rises when currencies weaken or inflation rises. Who wins and who loses when currency weakens? The possible winners are companies that export goods, people who invest in gold, people who own real estate, investors in equity. Possible losers, people who only have cash or fixed deposits, retirees who only get fixed income, investors who don't spread their money around. The Indian context, the inflation is the silent killer. The consumer price index in India is usually around 5 to 6%, but the lifestyle inflation for the HNI, high net worth individuals, is usually closer to 12%. For instance, in 2016, 1 crore could buy a fancy 3 BHK in a Tier 1 city suburb. In 2026, the same 1 crore might only be enough to pay the down payment and taxes on the same property. You can imagine the value. This is what happens when a currency loses value. This is another reason why people buy a lot of gold. Now we'll talk about the protection strategy. I'm going to suggest 7 ways to keep your wealth safe. And these are followed by many global investors, how they protect themselves from inflation and loss of. The first strategy is how to use gold. Gold is still one of the oldest ways to protect your wealth. Gold has grown by about 12% in rupee terms over the past 20 years. Do this. Put 10% to 15% of your money into sovereign gold bonds or physical gold. Gold is the best shot against fiat currencies that are failing. However, please note that making charges for gold jewelry ruins the game because different dealers charge differently. Gold has always kept its buying power over long periods of time. Second strategy is investing in stocks around 30 to 40% of your money. Equities are shares in businesses that make money. Sectors that often do well when the currency is weak, like exporters of IT, exporters of pharmaceuticals, companies that make things around the world. Focus on big private banks, Indian tech and FMCG companies that have a presence around the world, like Tata Motors, JLR, or Reliance. When you look at the long term, Indian stocks have done better than inflation. The third strategy is investment in real estate, 15 to 25%. Real estate is often a way to protect against inflation. Some choices are property for living, real estate for businesses. You can also consider investment in REITs, real estate investment trusts. Investors can buy into commercial property with less money through REITs. Fourth strategy, diversifying internationally 10 to 15% of your income. A lot of investors from around the world invest in things other than their own country. For example, Indians can send $250,000 abroad each year through the liberalized remittance scheme. Indian investors can get international exposure by putting money into US tech or global ETFs or mutual funds around the world or Nasdaq linked ETFs. This gives you a chance to learn about technology and innovation companies around the world. Your dollar denominated assets become more valuable in rupee terms when the INR falls. Strategy 5, 5 to 10% of your money should be in commodities. In the past, commodities have done well during times of inflation. Some examples are silver, funds for the energy sector, ETFs are commodities. These assets do, these assets don't always move the same way as stocks and bonds. The seventh strategy, managing debt wisely. Loans are affected by rising interest rates and inflation. Then, things to do, take care of high interest debt early, keep some cash on hand for emergencies. For stability, use government bonds or debt funds. The goal is to be financially strong, not to take too much debt. A plan for action. Next, in the next 6 months, slowly rise your equity exposure. Start SIP in funds that have a lot of different types of investments. Look into ways to get international exposure. In the next 12 months, finish allocating assets in a variety of ways. Look over your debts, change your investments every year. I'm giving you a bonus plan towards the end. Not many retail investors think about this strategy, diversifying currencies. Some investors keep a small amount of their money in global currencies like the US dollar. This you can do in funds from other countries, assets from other countries, accounts with global brokers. Any of the ways. This can work as a natural hedge when the rupee loses value. Now, the most important points in the final thoughts. 1. Inflation and the world economy cause the value of money to change slowly over a time. Putting all your money into one asset class can be dangerous. Having a mix of stocks, gold, global assets, and real assets makes your finances strong. The sooner you get ready, the better your financial future will be. Keep in mind that being rich is not just about making money, it's also about keeping its value. Keep in mind, before taking any decision, discuss with your financial advisor. Okay, thank you for watching this video, and if at all it has made any kind of sense to you, please subscribe. Thank you.